Manish Agarwal, partner and a leader for infrastructure at PwC India. Thank you for being with us today.
Sure.
Government across Asia are increasing their attention and infrastructure and spending on infrastructure. There are big infrastructure plans announced in countries like India, Indonesia, more recently the Philippines with the infrastructure plan announced by President Rodrigo Duterte. What is the role that the private sector, private investor can play in supporting this overall push to improve infrastructure across the region?
Right. So governments around Asia are making their infrastructure plans in accordance with the needs. The amount of infrastructure needed to get onto a high growth trajectory is very high in all of these countries. So everyone realizes that the public sector and the budgets will not be able to support the extent of infrastructure that is needed. So it is inevitable that private sector will play a large role. Indonesia, for example, has estimated that 30% of their requirement could come from the private sector. India had a target of 50% at one point in time. But the manner in which private sector invests in infrastructure going forward could very well be different from the past. The traditional project level financing through long-term contracts are beginning to become challenging. And part of the reason is that the world is becoming more uncertain. And in an uncertain world, to write a contract which locks in certainty over a 30-year period is somewhat not kind of congruous. I do expect that private sector investors, infrastructure funds, pension funds will look at other ways of partnering with governments in the government programs for building infrastructure.
Have you got in mind any specific way they can, moving forward, they can partner together to make these projects happen?
So it could happen at various levels. In India, we are finding the government is planning toll operate transfer type projects, which essentially means that toll revenues of the future get securitized. It has very little element. It has no element of build. It has very little element of operate. Similarly, countries are planning industrial corridors or economic corridors, which are sets of projects designed to make particular locations attractive for economic activity. So these kind of portfolio of projects have less uncertainty than individual projects where each one is only a part of the whole. So again, partnering in corridor type programs could be another way of managing risk. The same concept applies to smart cities or urban development projects, where again a portfolio of projects being done by a smart city SPV will have a much larger impact than individual projects that are interdependent. So these are some of the ways in which I think private sector could participate. The other is also government funds, where the government is setting up a fund. The government would like to be a minority in the fund, but that fund has access to projects that are largely in the public sector domain. So in a sense, it becomes private capital, public sector ownership and operations could be one of the new models that we see emerging.
Right, and we have seen private investment growing steadily in OECD countries, but now there is also an ongoing shift towards other geographies with investors looking for high levels of profitability elsewhere. So are they these new models and this combined with this appetite for project is creating increasing momentum for infrastructure, private infrastructure investment in the region?
Absolutely. So one of the trends that we as PwC have picked up is that the amount of funds being raised for infrastructure is very large, and in fact is more than investable projects. A lot of this is being driven by Europe and US, which also are rebuilding infrastructure in a big way. But at the same time, the increased competition is driving down returns, and therefore funds are looking to new geographies, new business models, and new risk levels to be able to still make the returns that they've been making in the past. In that context, if we see Asia, the share of infrastructure funds, pension funds, and sovereign funds in private investment is only 20% or so, compared to nearly 50% in the Western world. So clearly, Asian markets provide a good opportunity for these infrastructure funds to look for the right risk-return balance. The concern is that the return expectations, as they price in risks, become self-defeating, meaning that the return expectation itself is so high that it becomes unaffordable, either in terms of user charges or in terms of taxpayers. So I think the challenge is really both for investors as well as for the government to look for structures and platforms which reduce risk and therefore reduce return expectation to a level that the two balance out quite well.
A final point when it comes to infrastructure development in Asia, it always the perception is always that despite these big infrastructure plans, the development, the real pace of development, it is always slower than expected, and these plans tend to fail to live up to initial expectations. So in your opinion, what has yet to be done from a delivery, governance, regulatory perspective to improve the quality of these infrastructure plans?
Yeah, I think the important thing is for both investors and governments to recognize the reality of building infrastructure in Asia, the democratic processes, the multiple layers of government, the central government, provincial government, and municipal governments. All of that means that preparing projects is going to be that much longer, and any shortcuts have really resulted in difficulty later on. So I think that's step one, to recognize that there is a certain life cycle of land acquisition, approvals, clearances that needs to be taken into account of. Second, I think in that process, the use of technology is something that Asian countries can in fact leapfrog ahead. We are seeing a lot of use of technology in land mapping or creating land databases, for example. Similarly, in project planning, project preparation. I think if the governments were to take the lead in creating platforms for digital management of projects, so that the construction companies, the vendors, the developer, and the government are all operating out of the same platform, that would take away a lot of uncertainty. It would identify unrealistic expectations on timelines and therefore correct that. It would take away a lot of potential for gaming through scope changes, cost changes, etc., and therefore bring down risk and hence the return expectations that developers have.
Okay, so better preparation, better use of technology.
Technology, yeah, absolutely.
Perfect. Manish Agarwal, partners at PwC India, thank you very much for being with us today.
Thank you very much. It's my pleasure.